What's up, guys? It's April 30th, 2025. It's the last day of the month. Hope you guys are doing good. We're going to do today's breakdown and focus it more on leg counting because that seems to be the questions in the Discord. Start off with the daily chart here in the 45-minute, or this is the 15-minute. The question was, the way I count legs on a daily chart seems weird or it's kind of confusing. I've been really harping on how this is a leg 1, pull back, leg 2, pull back, leg 3, higher, low. So this is the fourth bear leg down. This could even be a fifth leg down, but we're going to keep it simple right now. So let's start from the basics. What is a leg? There's simple legs, there's complex legs, those are generally the two legs. The simple leg is just one bar in one direction. So bar 9 is a good example of a simple leg. Sorry about that. I thought someone was outside the window. I wanted to go look. So bar 9 is a good example of a simple leg. It's just a bar in one direction. It starts down here and it goes up. To understand how I'm counting a daily chart, the legs on a daily chart, I'm counting from a fractal perspective. So a simple leg is just a bar in one direction. Bar 2 is a good example of a simple leg. It's a bar in one direction. A complex leg could be, here's actually a good example of a complex leg. The spike starts on 32, leg 1, pull back, leg 2, pull back, leg 3. There's 3 legs that make up one leg here. I think yesterday I had a good example of a complex leg. Yeah, so right here around here, 42, because that's where the spike starts, through 55 could be a complex leg. 46 is a simple leg. It's just a bar in one direction. A complex leg could be leg 1. Let's just start it from here because this is a trend line break. Leg 1, pull back, leg 2, pull back, leg 3. So there's 3 legs here, and altogether this is one leg on a higher time frame. So we're going to take that idea of simple legs and complex legs. This is the daily chart. I'm going to open up the 45-minute chart right here. Where is my crosshairs? Okay. So this is the 45, this is the daily. I'm going to draw a permanent line here. Oh, let me turn this into the ETH session. Oh, that's annoying. I don't know why that keeps happening. Give me 1 second to change that. What is that? Trading. Why is that like that? Is it under canvas? No. Electronic background hours. Okay, 0. Apply to all. Okay. Where's this leg? Okay. So this leg, see how the crosshairs is what we're looking at. The crosshairs is the same on the left as it is on the right. This leg starts here. Now there's a tail on this. I'm going to get rid of the blue circle actually. There's a tail right here. This tail goes to right here. So see how this bar is that tail on the daily chart. Now I'm on the 45-minute chart. And then I kept saying there's a pullback right here. So this sideways price action is this small tail, and that small tail. So this would be the pullback. Right around there. So there's a pullback, right? Now this starts to see, so let's look at the 45-minute chart. Leg 1, I've been saying leg 1, pullback, leg 2. Here's the leg 1. I'll be more accurate. Kind of starts down here, wherever. So leg 1, pullback, because this is all a pullback. It's trending lower, but it's a pullback. And it gets a breakout. So here's the second leg I've been talking about. Second leg from the high right up around here, all the way down to here. Okay, no, actually down to here. So the second leg, this bar is from here to here. Okay, so now that's leg 2 on the day chart. Leg 1, pull back, leg 2. Because remember, this is just a simple leg on a smaller time frame. It's a complex leg that's made up with 3 legs down. Leg 1, pull back, leg 2, pull back, leg 3. Now I've been saying this is a leg for the bears. It's a hidden leg because it's in a bull chart. But we know there's a leg there because of the tail. So where are we? I want to draw it. So here, is the tail. So these bars right here is the tail. So now just from the 45-minute chart, leg 1, pull back, leg 2, pull back. See right here, this is the pullback, so this is the high. I've been saying the pullback is right here. So the next trend line break goes right here. I don't know why they're not adding up. I think because this is not a ETH chart. I'm not too sure why the lines are not adding up. The pullback goes from the low to here to the high of here. Okay, so now we're in that leg 3, sells off, and then there's the higher low right here that I've been mentioning that the bears got, and that's this higher low right around here. So there's the 3 legs down for the bears. 3 legs down puts us in a trading range, and now I haven't brought this one up, but there's also 3 bull legs. Here's a bull leg 1, pullback 2, deep pullback 3, puts us in train range. That's a wedge top right around here, testing the highs here. So this bull leg right around here is this big bear bar. So the same pullback that started the 3rd leg for the bears is the first bull leg. So the market's intertwined, right? So this is a trend line break, leg 3 for the bears. This is a trend line break, leg 1 for the bulls. Then we get a leg 2 rally right here for the bulls. And then we get a deep pullback breaking the low here. So it's a weak rally. It broke the low right here. So that's the breakout point that it got broken. You could argue the breakout point was also here for the bulls. Nonetheless, trend line break. So leg 1, pullback leg 2, pullback leg 3, trend line break. And this is that climactic bar from down here to up here. So from down here to up here is a 3rd leg for the bulls. So now bears have 3 legs down that we just counted. The daily chart, 45-minute chart. 3 legs down, leg 1, pull back, leg 2, pull back, leg 3. And for the bulls, leg 1, pull back, leg 2, pull back, climactic price action, leg 3, testing the breakout point. Now we have a bear channel against the bull channel. That's sideways price action. This bar shot to get its own 2nd leg. It had a complex pullback, so this is a wedge bottom. Push 1, pull back, push 2, pull back, push 3, wedge bottom. The market tries 3 ways, it's going to go the other way. And that's this price action right here. Leg 1, pull back, leg 2, pull back, leg 3. Let me recount that. So leg 1, pull back, leg 2, pull back, leg 3. Now we're trading right around here, which is the previous swing low. So that's that tail. Then it rallies. That's what we see here, this rally. And now bulls are starting to get a channel above the EMA. 1, 2, 3, 4 bars above the EMA. Trend line break. That trend line break is right around here. So that's kind of how I've been counting daily chart. I've been doing it a little bit fast, so I see how it's confusing because I'm counting visible and I'm counting fractal legs at the exact same time, and this is a complex leg right around here. So there's a lot of forces at play, but it's really important that we try our best to understand the leg count because that's how we can determine if the trend is going to continue or if it's going to fail. So yeah, these next few videos I'm going to be talking a lot about leg count. Gap down, bar 1, bear bar, and it has a tail here. So now this is the start to leg 2. Leg 1, pull back, leg 2, pull back, leg 3. And if you just want to count today's price action, leg 1, pull back, leg 2, pull back, leg 3, sideways. Tries to break out for a new low. They make the new low, 2nd leg, 2-legged trap right here. And it reverses, trapping bears. This is climactic, and now we're in trading range, so it's sold off. Bulls want to get back to the breakdown point, and they do by the end of the day. So gap down, bar 1, bear bar with a tail. This could be the start to a 2nd leg. Bar 2, big bear bar closing out slow. It produces a gap with bar 3. And bar 3 has a tail, so we know there's a hidden bull leg within that tail. And that's the start to the first pullback. Bar 3 is a bear bar closing above its midpoint, has a tail. Bar 4, bull bar, first bull bar after a gap down and 3 bars in a row. It's good for a short. And you can see if you actually shorted this, you would make a good scalp with bar 5 and 6, 2 bear bars closing on their low. This is 2 legs down. This is multiple legs down. So you just counting visible legs, leg 1, pull back, leg 2, leg 1, pull back, leg 2, pull back, leg 3. Bar 7, bull bar closing on its high, and there's a rally. So stop order bulls here actually getting filled because bulls that bet this is a trading range low, they're right this time. That's a low probability trade. Bar 8, bull bar closing on its high, and then we have a rally. Bar 9, bull bar closing on its high. Bar 10, bull bar closing on its high. Bar 11, bull bar closing on its high. All these bull bars are closing out at high, but they have tails. So what we do know is, although the bars are closing out at high, bulls are more inclined to buy the tails. So when the market pulled back, they bought it. Pulled back, they bought it. Pulled back, they bought it. When it got a little too climactic, bulls didn't want to buy high because this could be the start to a trading range high. And you can see the market actually goes sideways. Bears are now getting trapped. Bulls are now getting trapped. Bar 14 has the same context. It's a first reversal down after strong channels. It's the same context as bar 5. First reversal shallow. Bar 15, trendline break, rally. Bar 16, second bear bar. So bears have now tried 3 times. Leg 1, pull back, leg 2, pull back, leg 3. You can even say bar 17 has a tail, so they've tried 4 times to go down, and it's failing. This is starting to create a triangle bull flag. Strong rally here. 18 and 19, 20 start to break out, produce a bull gap right there. No gap. I think there's a gap right here. And I think so we have 2 bull gaps open. That tells you that the bulls are starting to trend. They're trapping bears that are shorting right here. Look where the gaps will line up. 50% at the swing point. So we know those are trapped bears betting for a leg down of this entire move. They're getting trapped. Now look at this, where this gap lines up. It lines up at the swing high. It lines up at bar 1's high. So we know limit order bears are willing to sell here, and now they're trapped with 22. Excuse me, now they're trapped with 20. 21, starting to go more sideways. Bulls are getting hesitant under the EMA. They're rallying, but they're taking profits. Rally, take profits. Big rally, taking profits. And then now 24 breaks the trend line. So now we have a second leg going on. Leg 1, pull back. Leg 2, pull back. Leg 3. What happens in leg 3? The market goes more sideways. And we see that right here. Bears now have a channel in leg 3. Trading range behavior. Again, this is a complex. This could be 1 leg on the 5 minute. This is 3 legs down on the 100-second chart. Or it's actually more than 3 legs down on the 1. Leg 1, pull back. Leg 2, pull back. Leg 3. That's right into the swing low. This is a trade I would have liked to take. I didn't trade today. This is a trade I would have liked to take. A limit order there, and then it rallies. I get out for 1 hour. This bar is climactic. It's a weak bull gap because it starts with a bear bar and it ends with a bear bar. So bears would short down here, bears short down there, and they eventually get out. They make profits on this leg down. 41, bull bar closing out high. 42, it's a bar that rallied. So it sold off and it rallied, but closed out its midpoint. 43, bear bar, looking for a second leg down from here. This leg shot to get second leg down, and bulls actually had a second leg trap. So leg 1, pull back, leg 2. Second leg trap, you could argue there's a bull leg here, so that's a wedge top into resistance, and then bears get a leg 1, pull back, leg 2. The trader was asking about, I believe she got trapped around this leg here, and that trade is not the worst trade. It's a leg 2 of this. What we have to learn is how to manage our expectations for what leg 2 we're taking. And in this situation, you took it was a leg 2 in a trading range, so you have to scalp in trading ranges, and you can see that 45 bounced off the 38 low. 45 through 47, 2-bar reversal. This rally starts at the 45 low. 46, bull bar closing on its high. 47, pause bar on the EMA. You might think it's getting a leg down, but if you understand the market context, this is actually trading range, and we just bounced off the lows, so the next target is the trading range high. And now we see 48. That makes a good gap here. Bull gap, and now look at where the gap lines up. It lines up around this bear leg. There's also a gap right here. So again, trading range behavior, gaps get closed. We have a bull gap here. It got closed here. We have a bear gap here. It gets closed there. But look at this 48 gap. It's right around this leg. So we know there's limit order bears trapped, and they get trapped at 52. The market goes sideways. Then we have a big pop, 58. 58 rallies, and it becomes very climactic, so bulls start to take profits. But there was enough momentum down to see 2 more bars in that direction. Leg 1, pull back, leg 2, pull back, leg 3. The bars are shrinking, bull momentum's dying. 58, bear bar closing around its midpoint. Context says we could go back into the EMA because we have 3 pushes up. Leg 1, pull back, leg 2, pull back, leg 3. Climactic, leg 3. 3 legs up for the bulls, and then we sell off. Leg 1, pull back, leg 2. Look at the sell off, right? Trading range behavior, gaps get closed. That's sold right into the gap. The market goes sideways because now there's a big up, big down. And then finally, for the end of the day, 74, 75, 76, 78, 77, 78. There's bull gaps. Bulls are starting to trap bears at the end of the day, and we're getting a nice EOD rally. Trading past bar summary 2 is kind of hard. The market's a little more sporadic, so don't feel bad if you missed this rally. I know it looks like it's the best rally of the day, but the context was actually hard to buy this rally. That these bars are going to be big, these bars are going to be moving fast. 3 gaps in a row. This could all be seen as one big gap, and this is the biggest gap right here. I'm going to drag this aside. Actually, I'm going to leave it right there. 3 gaps in a row, so we can see that as one big gap. We started out with 2 gaps here. We started out with a big gap here. This is an exhaustion gap with the biggest candles matching it, and we're in the third leg. So multiple reasons to take profits if you're in this leg, because it's the third leg up, it's the biggest leg up, and it's the end of the day. And it produced the biggest gap if we combine these 3 gaps. Even if we didn't, these gaps are all generally bigger than the previous gaps. So that's something to think about if you are holding long around here. It's that this is climactic price action, third leg climactic price action, biggest gaps climactic price action, 3 reasons to get out. Let's go over the measured moves. Trading range behavior. So we get to get 1 hour of the trading range. Look at 56. It rallied, and then trading ranges, this is quite common. It rallies and it sells off right before the target's hit, or it sells off and then rallies. So that's common. So there's a good measured move that was met there. Let's say you want to catch a leg 1, leg 2 of this. Well, you can't really do that because it was never met. But what you can do is catch a portion of this leg 2 down. So that was an acceptable trade. Not a trade I would have taken. 7 bars in a row. I know there's a few of you that would like to take this entire thing. And if you make 1-to-1 of this, this is a rare event. You're going to make 1-to-1 of that. This is breakout bars are climactic in itself. So every breakout bar is a buy climax, or every bull breakout bar is a buy climax as well. So this is climactic price action. But in this situation, the context was good and there was enough momentum to get a second leg up. And the measured move was met right around here where everyone went sideways. Again, so we could do it from 23 to right around the 15 low, put it below 24 because that's the trend line break. You put your stop down. I would not put my stop down here, but this is 1-to-1 and you would meet that on 76. Here's a bear channel down. I think I would take a limit order short under 32 and I would scalp out on 44. The bears actually put it to the high here. They don't make 1-to-1. Again, how I just mentioned in trading range behavior, the market can rally and sell off right before the target. In this situation, the market sold off and rallied right before the target. So there's a good example for both directions. Then we have another bull leg here. Put it to the pullback. Again, 1-to-1 was met. And the stop wouldn't get hit. Something I want to talk about this day though, and how all these 1-to-1s are working. It's a trend. It's a trading range. It's a trending trading range day. And on trend days, targets will get hit. It's not that common to get 1-to-1 of 7 bars in a row. So just be cautious of that. If you're going to hold a trade, the probabilities generally aren't that good for another X amount of bars in that direction. Today was last day of the month. We had trending behavior from the open. It was an opening reversal that trended up high. So most of the measured moves worked. Trading range behavior breaks out and is met in 1 bar. So keep that in mind. Guys, let me know if you have some more questions about counting legs. I am in the Discord. I'm here for you guys. I want you guys to ask me questions. We're all going to get better together. A few of you have been messaging me on the side, and you guys are turning some profit, so I appreciate that. Thank you for putting in the work. If you learned something, share the show. Don't be a hoe. I will talk to you guys tomorrow. May 1st. Everyone be smart, and let's have a good month. Thank you, everyone, for your time. Bye.